4 easy payments, 0 interest. Click, celebrate, repeat. What looks like convenience is actually a carefully engineered shortcut to debt, a life you can't afford. Klarna weaponized psychology, created phantom debt, and built a $17 billion empire by convincing millions that spending money they don't have is freedom. Welcome to the world of buy now, pay later, where 60% of Coachella tickets in 2025 were purchased using payment plans. 6 out of 10 people couldn't afford a music festival up front, but this story goes way deeper than concert tickets. Let's rewind. 2005, Stockholm. 3 economics students, Sebastian Siemiatkowski, Nicholas Adelberth, Victor Jacobson, ask a simple question. Why is paying online so difficult? Their answer changed the world. Let people buy now, pay later. Simple, addictive. By 2010, Klarna was all over Europe. The trick is actually pure psychology. You see, a $1,000 purchase sounds expensive, but then Klarna shows you 4 payments of $250. Suddenly, your brain doesn't see $1,000 anymore, it just sees $250. Your brain thinks, I can afford that. Your brain tricks itself because the number got smaller, but here's the thing, you're not paying less, you're just delaying the pain. By 2021, pandemic shopping went crazy. Klarna hit a $46 billion valuation, SoftBank threw $639 million at them. The founder, who once lived on welfare, saw his net worth peak at $3.2 billion in 2022. The immigrant kid who flipped burgers now controlled a financial empire bigger than most banks. The ultimate success story, but something was already breaking. By 2022, Klarna's valuation crashed 85% to just $6.7 billion. Inflation rose, interest rates climbed. Those free loans suddenly didn't look so free. The company lost money for 19 years before finally turning a profit in 2024. 1 year of profit, then straight back to massive losses in 2025. This is where the story gets dark. 63% of buy now, pay later users had multiple active loans running at the same time. Nearly 1/3 borrowed from more than one lender. People weren't just using Klarna, they were using Klarna and Affirm and Afterpay all at once, stacking debt on top of debt. Economists call this phantom debt. Money you owe that doesn't show up anywhere. It won't show up on your credit report. Other lenders can't see it when deciding whether to loan you money. It's invisible until it's not. Get this, nearly 2 in 3 people applying for these loans are subprime or deep subprime borrowers, meaning the people least able to afford debt are the ones getting it the easiest. That should terrify you. So, who's actually using these services? Nearly half of BNPL users are Gen Z, around 40% are millennials. These are young people who watched the 2008 crisis destroy their parents, they graduated into recessions, they face housing prices they'll never afford, and student loans that never end. Only 26% of Gen Z think they'll own a home by age 35, so why save? Why deny yourself anything when the dream is already dead? More than half of buy now, pay later users are buying things they literally cannot afford. Nearly 70% admit they spend more than they would if paying up front, and over 40% paid late on a loan in the past year, up from 34% the year before. But wait, this gets crazier. In March 2025, Klarna partnered with DoorDash. You can now finance your food delivery, go into debt for a burrito, meals you'll eat in an hour but pay for over weeks. The internet had a field day with that one, but the reality isn't funny at all. You are not getting luxury anymore, you're getting financing basic consumption. When people are taking out loans to pay for takeout, something is fundamentally broken. The generation is supposed to build the future. Instead, they're drowning in payments for festival tickets, takeout, and clothes they wore once for Instagram. As things get messy, Sebastian Siemiatkowski doubled down, not on people, but on AI. He sold everyone on a vision, democratized finance, credit for everyone, breaking down barriers that traditional banks put up, making finance accessible to people who looked like him, immigrants, outsiders, people the system ignored. Noble goals, right? Except here's what happened when the money dried up. Back in December 2024, Siemiatkowski publicly announced his company won't hire anyone new because AI can do all the jobs that we humans do. Earlier that year, he'd replaced 700 employees with AI, about 10% of his workforce. He bragged about it, told everyone how OpenAI's tools could do the work of 700 people. The company slashed its workforce from 5,000 to 3,000 in just 2 years through AI automation and hiring freezes. Then the losses doubled. Of course, customers stopped paying back loans, and suddenly, in May 2025, he admitted there will always be a human if you want for customer service. Convenient reversal after firing hundreds. Now the company plans to use an Uber-like approach for customer service, letting workers log on and off as demand spikes and falls. Gig economy logic applied to fixing the problems created by replacing humans with machines. Siemiatkowski simply slashed costs everywhere, cut staff, replaced humans with AI, and in September 2025, Klarna went public. They raised $1.37 billion at $40 per share. Shares opened at $52, jumped to an intraday high of $57.20, then closed at $45.82 on the first day. Company valuation, $17.3 billion. Not the $46 billion peak, but still stunning for a company reporting double losses and surging defaults. 40 current and former employees became millionaires overnight, joining the 115 who'd already hit seven figures back in 2021. Siemiatkowski owns 25.6 million shares, worth about $1.1 billion. Co-founder Victor Jacobson, who left in 2012 but kept his shares, owns 31.4 million shares, worth about $1.3 billion. Sequoia Capital, their biggest backer with 22% of the company, made about $2.65 billion. The venture capitalists cashed out instantly. The founders got rich, the immigrant success story complete. Except the losses kept accelerating. Let me show you the bigger picture here. U.S. consumer debt hit $18.2 trillion in early 2025. That's trillion with a T, and buried inside that mountain is the phantom debt. Buy now, pay later loans that never got reported, never get tracked, never get counted. Afterpay shares zero data with credit agencies. Klarna shares some in the UK, but not everywhere else. Why does this matter? When you apply for a mortgage, banks can't see your 7 different payment plan accounts. When you need a car loan, they have no clue you're financing DoorDash orders. The system keeps everyone in the dark, including you. For a second, think about the business model here. It's evil. These companies make hundreds of millions in late fees from people who can't pay back loans on time. It's not about helping responsible borrowers, it's about volume. Sign up as many people as possible, then profit when they miss payments. Did you know Klarna even secured an exclusive deal with Walmart? Yes, America's biggest retailer now offers Klarna payment plans. You can finance groceries, toilet paper, school supplies, going into debt for consumables you'll use and throw away before the payment plan even finishes. Okay, let's zoom out. In 2023, American used BNPL for over $100 billion in retail purchases, 5 times more than in 2020. 3 years, 5 times growth. That's addiction, that's dependency. 1 in 5 users are buying essentials with these loans, not luxury items. Essentials, food, medicine, basic necessities. In the UK, 21% of users either missed or made late payments. 10% got visited by debt collectors or bailiffs. The Federal Reserve Bank of New York said it plainly. People using buy now, pay later are disproportionately financially fragile. Most couldn't come up with $2,000 in an emergency. When the users cannot pay, they take out loans to pay other loans. A debt spiral disguised as financial empowerment. Even today, Klarna says everything's fine. They claim 83% of these loans get repaid within 6 months. Their credit loss rate only went from 0.51% to 0.54%. Sounds fine until you realize credit card defaults and student loan delinquencies are surging everywhere. Marshall Lux from Harvard called buy now, pay later a bubble with potential to become pretty big under stress. Not might become terrible, already has the potential. In case you didn't know, 2/3 of these borrowers are subprime. They're essentially vulnerable to economic shocks. And what's happening right now? Economic uncertainty, tariff chaos, consumer confidence near record lows, the perfect storm. So, where are we now? Klarna's IPO has oversubscribed 25 times. Venture capitalists made billions, founders made billions, but the customers still paying off burritos from 3 months ago. We've built a culture where debt is packaged as freedom and consumption is a coping mechanism. An entire generation that finances concert tickets, meals, and clothes in debt. The question isn't whether this ends badly, it's how badly and when. Klarna spent 19 years losing money before one profitable year, then straight back to losses. Most buy now, pay later companies operate at losses despite growing revenue, the whole model needs endless new borrowers to cover the new ones who stop paying. It's musical chairs with debt, and the music is still playing for now. But what happens when everyone realizes they're playing a game they can't win? When the music stops, someone gets left without a chair, and it won't be the venture capitalists or founders who already cashed out billions. It'll be the 27-year-old still paying for a beach trip from 2 years ago, the Gen Z worker financing Coachella tickets for experiences they barely remember, millions who thought buy now, pay later meant freedom. It means debt. Dressed in pink logos, influencer smiles, and zero-interest lies. And debt always comes due. So, what do you think? Is BNPL the future of finance, or the next financial bubble waiting to pop? Drop your honest comments below, and if this story about the excesses of modern finance hits you, wait until you see what's coming up next. We have another video about the excesses of private credit at the business level. Click here to watch now. Don't miss it.